Back. Positive global PMI numbers, particularly out of the United States, have helped to spur momentum. The combination of the US Fed Reserve's a more hawkish approach to interest rates and Donald Trump's tax cuts continue to buoy the US dollar further, putting emerging market currencies like the rand on the back foot. Due to the stronger greenback, a number of commodity prices, including copper, oil and gold, are lower, while the yellow metal registering a 7-week low. Let's take a look at the indicators now. Leigh Riley from IG South Africa joins me now from our Johannesburg Stock Exchange studios to look at some market developments. Good afternoon. Thanks so much for your time on SABC News.
Good afternoon. Good to be here.
Now, the positive global PMI data, particularly out of the US, appears to be giving global equities impetus today.
That's right. So some of the best that we've seen in the last 13 to 14 years or so. It's put the fear into some of the emerging markets. So we've seen some negative currency reactions in the likes of the lira and the rand. And it kind of ties in with some of the conversations or some of the statements that have been coming out of the more hawkish Fed constituents as well. So all in all, not good for the emerging market currencies. But we've actually seen globally some really decent strength in some of the equity markets, and subsequent to that, a pullback in some of the precious metals and the commodities after the geopolitical tensions in the South Pacific seem to be calming down.
Now, tonight in South Africa, global fuel prices go up as well as across the world. When you look at global oil dynamics and put that against a weakening local currency like the rand, do you expect that we'll continue seeing more fuel increases in the fourth quarter? Yes,
I do. Unfortunately, is the straight answer. With the amount of instability that we might see on the political front over the next 2 to 3 months, with the very hawkish commentary coming from the United States and the improving economy, in particular in the developed markets, I would expect the rand to subsequently weaken to 13.80 and 14 rand respectively. On the flip side to that, commodity prices, in particular Brent crude, it's very difficult to say, depending on what happens with OPEC and non-OPEC producing countries, whether they're going to abide by the agreement. At these levels, it means that they're making money. It means that they'll probably be fairly happy. I would imagine that we're going to see Brent crude fairly range-bound between this 55 and 60 mark. If that is the case, based on where we are now, then yes, I would expect us to see, unfortunately, worse off fuel prices for local consumers and increased pressure.
You've spoken about this hawkish tone and kind of a downside momentum for emerging market currencies like our rand. How long do you think we can see this trend continuing for, not only with our rand, but other emerging market currencies?
Well, when we look at the dollar relative to a basket of other currencies for the year, so the dollar index or the DXY as most traders would be referring to it, we'll see that the dollar has actually been one of the most undervalued sort of major currencies for the year, and it's only in the last 2 weeks to maybe a month that we've started to see a really strong technical turnaround in the price action. On that dollar index against the basket of 6 currencies, it's now trading above 93, which is a key technical level. It means that we might start to see a further strengthening trend for the US dollar, and combine that with the expectation that the Fed is going to raise interest rates in December, it doesn't bode well for emerging market currencies. On the flip side to that, we need a weaker rand for rand hedge stocks to really perform in our local index. So ultimately, we could actually see our local index pushing to new highs.
Now, Sun International announcing that they're considering the issue of raising money via share deal to deal with their large debt burden of about 15 billion rand, and also talking about pulling assets away from South America. It sounds like they've fallen into a bit of a rut. Was there any reaction on their share price? And what's your thoughts on their current strategy?
I can't comment on the current strategy. They've got to look at, I think, the timing of the acquisitions, the capital expenditure. Unfortunately, they have fallen prey to a number of incidents in Latin America that has forced some of their operations to close for nearly 2 weeks, which hasn't helped some of the revenue that's been generated. But with the current environment, with the amount of feet coming through the door and the amount of revenue that they're generating with all of this going on, and the amount of debt that they're currently holding, it just means that shareholders are probably looking for other opportunities. So they're teetering on the edge of a 50 Rand abyss at the moment in terms of the share price. If you look back at it, there's not a lot below here. I think you would have to really look at the business, analyze it, and look at the type of commentary that is coming out from the leadership team and see what their plan is to try and pull this business back from where it is at the moment. If you've got confidence in that, and if you're happy with the type of business that they conduct, then from a value point of view, this could be good for them. But based on the revenue that they're generating at the moment, if we strip out some of those acquisitions, I think they were almost 29% down on their earnings per share. So the increase in revenue that we saw came from the addition of some of their Latin American operations. And I think it's just a question of time. And as I say, it'll really depend on the commentary from the exec and how they take this business forward and what they intend to do in terms of the capital raising to essentially try and sort of rescue this business from where it is now.
Leigh Riley from IG South Africa, thanks so much for your time on SABC News. He's coming to us live there from the Johannesburg Stock Exchange. It's time for a short break. After that, we'll bring you an in-depth look at the growth trend in the mid-market hotel sector in South Africa. Do stay with us.